Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the selling that happened yesterday into the close continued into the overnight session. Overnight, we had resistance at 25 to 28, and that area ended up capping the upside. At this point, heading into the day, we're going to be using 18 to 20 as the micro bull bear zone. Now, holding above 18 to 20 doesn't necessarily mean that the market is very bullish. It just means that we're holding those recent lows of 1918 and the market may not be as bearish. In order for the buyers to really confirm that they're back in control, we would have to see a break above 26 to 28. And in the short term, that would tell us that now perhaps we can get some better buying and a move up to 33.75 to 35.75 and 38.5 to 40.5. But as long as we're holding below 26 to 28, the market can simply balance at some of these lower prices. And then if we're holding below 18, then you know that there's some real weakness in this market, and we can go down to 15 quarter, 10 half to 11 half, and then potentially down to 05.75 to 07.75. But as we head lower and test those support zones, we can still get bounces, and responsive buyers can still be active at the support zones below. We've already seen a big sell move yesterday. We're heading into the weekend, and at this point there may not be more selling left in this market. And for that reason, even if we hold below 18 to 20, we may not really extend the range by too much. We could just find buyers at 05.75 to 07.75, or in the event of some continuation, we can find buyers at 01 to 03. But the idea is that going lower from here, the chance of a trend down or a strong liquidation move through these support zones is very low. So at the very minimum, we can expect rotation and bounces at the support zones. And one of these support zones, either the 05.75, 07.75, or 01 to 03, in the event that we get there, can even shut off the selling, and then we can simply balance in this range below 26 to 28. So today we have to be open to both directions, long and short. The focus initially is going to be more on the short side because, at these higher prices up here, above 18 to 20, it's a bit risky because the market could just continue balancing below 26 to 28. So the upside reward potential is not very high until the market puts in a breakout above 26 to 28. So for that reason, in this range, even though we're technically above the micro bull bear zone, we're going to be more focused on short side, looking for a retest of 18 to 20, 15 quarter. But then as we head lower, and especially if we extend the range below the overnight low, below 10 half to 11 half, then we have to be careful on the short side because at that point, there may not be enough reward potential left to really justify either putting on additional shorts or holding a short position for a bigger move because buyers can be active at 05.75 to 07.75, 01 to 03. And from there, we're really going to have to gauge it in real time, right? How weak the market is setting up in real time, whether it really justifies a move lower below those zones. But the main expectation today is to look for balance, mainly below 26 to 28, and then if we get a breakout above 26 to 28, at that point we have to be careful on the short side because we can still get rotation at the resistance zones, but at that point the chance of a big down move would be relatively low. So at that point we could simply balance at the higher prices above 26 to 28, and we could actually shoot for 38 half to 40 half. So we can still consider shorts up here. We just have to manage them a bit more closely. But the primary scenario is that we're basically just balancing at these lower prices, and today could just be a day where we more or less consolidate and digest the strong move that we saw yesterday, the strong failed breakout from Thursday, basically, or sorry, from Wednesday. So at this point, as long as we're holding below 26 to 28, the sell side can remain in control. Above 18 to 20, we just want to be more aware of trade location when we're putting any shorts on. And below 18, we can quite easily test 15 quarter, and then the next area would be 10 half to 11 half. Buyers can still be active at 10 half to 11 half, And in the event of a break below here, then the next zones can still attract responsive buyers. This is a good zone, and then 01 to 03 can again attract responsive buyers. 96 to 98 is pretty much an automatic long setup if we even get down there. So just have to be careful with how the market treats 18 and 26 to 28 today. That's really going to give us a good gauge on where this market could be headed. So those are the main ideas heading into the open. Let's see how well the sellers can maintain control below 26 to 28. Let's see how the market treats the 18 double bottom that we had from before, and we'll take it from there.